Well, obviously these polls are really close and they're fluctuating a little bit. So you could have a block of or a majority, let's say, in the parliament that's for staying in the euro and accepting the bailout package that's already been negotiated, or you could have a block that doesn't accept that, in which case Greece defaults and you have potentially a disorderly exit. You have potentially bank runs in countries like Italy and Spain, and so that's obviously the issue that's unsettling the markets. And if, on the other hand, if you do have a majority that favor staying in the union, then that would be positive for equity markets and for risk assets. And then there is a possibility of having essentially a repeat of what happened in the last election, which is no one can form a government. So that's also a possibility as well.
And Andy, which do you think is most probable, and by what percentage?
Well, I would say we sort of lean just slightly towards the idea that the parties that favor sticking with the deal will win, because the polls show that most people want to stay in the euro. And so if they want to stay in the euro, presumably they'll vote for those parties. But, predicting that election, I think, is very difficult. And I think having a lot of confidence in how it's going to turn out is not, there's no foundation, I think, for having that kind of view.
Yeah, right. I recognize it's kind of like picking at straws. Of course, a number of very large investors here in the U.S. and abroad pay you for your expertise and to try to help them navigate the market. So all that said, what are you telling large institutional investors to do with money as a result of what is upcoming in Greece?
Well, I think it's difficult to predict what's going to happen here in the next month. I think that what we're arguing is that things are going to remain difficult. When you look at the big picture here, the countries like Greece and other countries in the southern sphere of Europe, I mean, they've got high debt to GDP ratios, they've got competitiveness problems, high unit labor costs. Those things aren't going to get solved easily. They're not going to get solved by just printing more money. It's going to take some significant economic dislocation is what's ahead of us. So whether that's a near-term, very disorderly move, or whether there's something that's going to be more difficult in the future is difficult to know. But I think these problems aren't going away. Things are going to get tougher, I think, in the EU is the bottom line.
Yeah, hence the move that we're seeing today into bonds, creating 50-year lows on some of the yields, and, of course, stocks getting sold on the other side. Let's shift gears for a minute and just talk briefly about what happened last night in Texas. Mitt Romney obviously getting the delegates. Does the fact that this election now moves to its next stage, does that have an impact on the U.S. markets in any way from your viewpoint?
Well, I think in a way we kind of moved to we've already moved to that next stage about a month ago when Santorum got out of the race, and so he's been the presumptive nominee. Now he's not quite officially, because we haven't had the convention yet. So I don't think there's really much of a difference between what happened a month ago and where we're going to be at the end of August. I think we've moved into the general election campaign. Historically, markets don't discount election outcomes until after Labor Day. And, this time there's a lot more at stake, and I think certainly investors are paying a lot closer attention to the election than has been my experience in the past. Part of that's the fiscal cliff. Part of it is that just the stakes in general in this election, I think, are higher than they've been in a long time.
And as I'm hearing you put that in perspective, you mentioned Labor Day is the point at which markets react. Does that sort of argue for a long, drawn-out sideways summer where it's going to be hard to make money in equities?
Well, I think certainly to the extent that you're trying to make money based on a bet on how the election is going to go, I think you'll be frustrated by that. I think that, if you look at the last 9 presidential elections, the loser has led in a poll in 7 of those 9 elections sometime in July or after. In 4 of those 9 elections, the loser has led in a poll in mid-October or later. So we have a center-right but closely divided country. The polls are going to move around, and I think the investor perceptions of who's going to win the election are going to get whipped around over the next several months.